Welcome back, everyone. The stock market continues to be volatile in 2023, but with volatility comes opportunity. Today I want to talk about 3 dividend stocks that are offering above average dividend yields right now, and could present an interesting opportunity going forward. I'll be showing you a dividend yield theory chart for the last 7 years for each stock to paint a better valuation picture. Let's kick things off with our first stock today, which is going to be Intel, ticker symbol INTC. The stock currently trades for about $30 and offers a dividend yield around 4.9%. Historically, Intel has generally traded with a dividend yield below 4%, and even below 3% for a few years. Prior to 2022, we would have had to go all the way back to 2013 to see a 4% plus dividend yield from this stock. As most of you that are familiar with this company already know, Intel stock has been beaten up pretty badly during the last year or so. The dividend yield in 2022 peaked at 5.76%, and at the beginning of the current year, you could have still picked up shares with a dividend yield above 5%. The stock is up about 11% year to date, and as a result, the dividend yield has trended lower, but from a long-term historical perspective, it is still considered above average. Let's see what the dividend yield theory chart can tell us about Intel. I recently transitioned the dividend yield theory chart to Google Sheets and automated the process so that I can analyze stocks faster. All I need to do to create this chart is to copy the dividend history from Seeking Alpha between 2011 and today and estimate the dividend for the current year. I can paste this data into the historical dividend tab here. And since Intel hasn't announced its dividend for 2023 yet, which by the way should be announced any day now, I will simply use the 2022 rate for 2023 to keep my assumptions conservative. Let's jump over to the dashboard and enter the ticker symbol for Intel, and give Google a second to crunch the data. And voila, we have Intel's 7-year dividend yield theory chart. We can see that the stock has certainly fallen quite a bit from its high in 2021, as shown by the black price line on this graph. The stock has trended down into the dark green deep undervalued zone, as dividend yield theory suggests the fair price for the stock right now is about $52. If we take a look at the actual and rolling 5-year average dividend yield chart, we can see the trailing dividend yield for Intel was trending lower between 2017 and 2021. It has shifted to an upward trend following the recent spike in the dividend yield, and will likely trend higher so long as the current dividend yield remains elevated. The trailing dividend yield that is trending upwards will have an inverse impact on the fair value for the stock. And we can see this in the dividend yield chart, as the fair value price for Intel has moved lower during 2022, and thus far in 2023. On this chart, when the company announces a dividend increase, the fair value price jumps higher to adjust for the increase in the forward dividend yield. And in between dividend increases, the fair price is adjusted accordingly based on the direction of the trailing dividend yield. Generally, what I would want to see is an upward trend for all valuation zones on this chart, so the downward trend for Intel in 2022 is not favorable. 2 things can happen from this point. 1. We can see Intel's stock price reverse back to its fair value price, and the dividend yield trend lower to align with its trailing average. Or 2. The fair value price will trend lower and align with the price level at which the stock trades today. Which of these 2 things will come true depends on what type of results Intel can deliver in the coming years. Analyst estimates are not overly optimistic. Intel posted total revenue for 2022 of $63.5 billion, which was a 15.02% decline from 2021. And they are also projected to see a decline in revenue in 2023. For 2024, analysts are forecasting 6.91% of growth, but that would only bring the company slightly ahead of where they are currently. For perspective, in 2021, Intel had total revenues of about $75 billion and about $78 billion in 2020. Earnings per share look even more bleak. For 2022, Intel reported earnings per share of $1.95, which was a 64.31% decline from a year ago. 2023 is projected to see another decline, down to $1.86. Followed by a pretty good rebound in 2024, up to $2.60. I think the stock found its bottom when it traded for around $25 a few weeks ago, and it is pretty attractive at its current price. It also offers a solid starting dividend yield right now. But Intel also has a history of not being able to deliver on growth in the past, and I think it may be a while before we see strong upward movement of the share price. Okay, stock number 2 today is Verizon, ticker symbol VZ. Shares trade for about $40 today, and the stock pays a healthy 6.6% dividend yield. I've already copied the dividend table from Seeking Alpha and estimated the 2023 dividend using the most recent quarterly dividend rate of 65.25 cents. And here is the 7-year dividend yield theory graph. It looks different from Intel's graph, as it's more flat but does have an upward trend. We can see that Verizon traded both above and below the fair value price during the last 7 years, and currently the price is well into the deep undervalued zone. The dividend yield chart suggests the same, as Verizon's yield has spiked recently, breaking away from its moving average. Historically, the moving average has remained flat right around 4.5%. More recently, it has started to trend higher to about 4.7%, but is still very far off from the actual dividend yield. Verizon has seen a decline in earnings per share, with 2022 coming in about 3.9% below 2021, and 2023 earnings projected to drop by another 9.39%. Analysts are forecasting this negative trend to reverse by 2024, and earnings growth to pick up steam by 2026. Revenues look much better, with the company seeing growth of 2.42% in 2022, and projected growth for the next several years. The growth projections are not high, with about 1% growth per year on the short end, and 2% on the tail end of the forecast. I think the stock looks very appealing today for those seeking a higher dividend yield, and it does have some long-term potential upside for capital appreciation. Stock number 3 today is VF Corporation, ticker symbol VFC. It trades for about $30 right now, and pays a historically high dividend yield of about 7.2%. VF Corporation took a worse than average beating during the pandemic market drop, and it took the stock longer to recover than most other equities. In fact, it never bounced back to its pre-pandemic levels, and has taken an even worse beating in 2022. The stock is down about 70% from its all-time high during the last 7 years, which is pretty awful for long-term shareholders. We can also see in the dividend yield theory graph that the fair value price is trending lower, with the occasional boost from past dividend increases. The fair price right now, based on this graph, is about $69, which is more than twice the actual price the stock trades for. I think there is room for a recovery on the horizon, but it has to be substantiated by growth in future financials. If we take a look at the dividend yield graph, it paints a better picture of just how much higher the current dividend yield is compared to its historical levels. During the pandemic lows, VFC paid a dividend yield slightly higher than 4%, and more recently it paid a dividend yield almost twice as high. The current yield is slightly below all-time highs, but still very attractive from a historical perspective. During the last 7 years, the trailing dividend yield has trended much higher, and is establishing a new normal level around 3%, whereas it was below 2% in 2016. Revenue for fiscal 2023 is projected to be 2.55% below fiscal 2022, but analysts are projecting increasing growth for the next several years. Earnings look worse, with a projected decline of 34.93% for fiscal 2023, but analysts are also projecting to see a return to growth by fiscal 2024. Based on these estimates, it will take about 3 years for VF Corporation to post a new all-time high earnings figure. If these assumptions prove to be accurate, I think there is a higher probability we will see the stock return to its fair value price, than to see its fair value price trend down to where the stock trades today. I believe we will see the fair value price trend lower in the coming months, and it will take a while to capitalize on this potential opportunity. If my assumption proves to be accurate, I don't think we will see a 7% plus dividend yield for VF Corporation in the future. There you have it, 3 dividend stocks offering very attractive dividend yields today. If you'd like to see the dividend yield theory chart for any other dividend stock, let me know in the comments below. Also, if you'd like to play around with these charts yourself, the file is shared with my Patreon community. There's a tutorial video out there that explains how to use this spreadsheet. A link to my Patreon page is in the description below. I also recently posted a similar video talking about the 5 most undervalued dividend stocks in my portfolio. There's a link in the description below to that video as well if you'd like to check it out. Thank you for watching and see you next time.